You're listening to the Multifamily Marketwatch for Washington State. Apartment owners who need to know, trust HFO. The leading source for multifamily industry news around the state, from Puget Sound to the Tri-Cities.
Welcome to HFO's Multifamily Marketwatch update for Washington State. I'm your host, HFO broker Aaron Kirk-Douglas. Here's some recent news you may have missed from around Washington since our last podcast. Rent gains have lost momentum throughout the state, even as the housing shortage spreads. A recent Tacoma apartment complex sale has reached the highest per unit price on record for the area. Ambitious developments are underway in Kent, Everett, Seattle, and Tacoma. And loan rates remain in flux. We'll have the latest lending update from Gantry, Inc. All this and more in just a moment. HFO's podcasts are sponsored by Forensic Building Consultants, a national firm offering experts in the investigation, resolution, and prevention of construction-related defects. CoStar reports that rent gains have lost momentum throughout Washington in the second quarter of this year. The rent growth remains on par or above pre-pandemic levels in Seattle, Spokane, Bremerton, Wenatchee, and the Tri-Cities, but a slowdown signals that the time of record-breaking double-digit rent growth is at an end. CoStar reports many areas are experiencing falling demand at a time when new construction is adding new inventory, including a near-record level of 23,000 units now under construction in the Seattle metro area. Spokane is experiencing a 4% increase in units, and Bremerton is adding 1,200 or about 7% more apartments to its housing stock. Ambitious new developments are underway throughout the Puget Sound region. They include 564 units near light rail at the Des Moines-Kent Link Station. The apartments would open sometime around the completion of the Federal Way Link extension in 2024. 317 apartment homes are proposed in downtown Everett near Everett Station, a major transit hub offering Amtrak, Sounder, Greyhound, and regional bus service. The third project, with 250 affordable homes in central Seattle, will focus on 2, 3, and 4-bedroom units, in addition to a few one-bedrooms. The project area is a full block located at the intersection of 19th Avenue East and Yesler Way. Another project already underway in downtown Seattle, a 45-story development at 6th and Battery with 1,130 units, is being converted from condos to rentals. The tower is the largest development of its kind in the city. Interestingly, a second condo project, a 57-story tower known as the Civic Square at 3rd and Cherry, has paused construction due to construction and commodity price volatility. Meanwhile, in Tacoma, construction continues on Tacoma Town Center. The urban revitalization project is redeveloping a few blocks to bridge the divide between the Brewery District and the Museum District to unify the downtown area. This mixed-use development includes 600 apartments, 240,000 square feet of retail, and 200,000 square feet of office space across the project's 6 buildings. A section of Fawcett Avenue will be removed to make way for a pedestrian and bicycle promenade. The development hopes to offer entertainment options like mini golf and bowling, in addition to shopping and restaurants. One apartment building is complete and the second is underway at Fawcett and South 21st. The remaining buildings are expected to be completed in 2025. The 111-unit 6th and Alder apartments in Tacoma recently sold for a record-breaking $416,000 per unit. The buyer is a family-run investment group which spent more than double the $180,000 per unit average for Tacoma, even more than the $366,000 average for Seattle. A new study that examined 16 metro areas in Washington, Oregon, and Idaho found that all 16 has a housing shortage in 2019. The report by Effort Growth found that Yakima was short 6.4% of needed housing, Olympia, Lacey 5.8%, Seattle, Tacoma, Bellevue, and Bellingham lacked 5% of needed housing, Bremerton, Silverdale, Port Orchard 4%, Spokane and Spokane Valley 3%, and Wenatchee 1.2%. Yardi Matrix predicts that 40% of all single-family rentals will be owned by institutional investors by 2030. Institutions funded $2.5 billion in single-family residential acquisitions in 2021 and committed more than $60 billion in capital to buying single-family rental homes over the past year. With me today is Blake Hering, a principal with Gantry, Inc. Thanks for joining me today, Blake.
Yeah, thank you for having me.
So can you tell us a little bit about how things have changed the past few weeks with multifamily lending rates and where we might be going?
Sure. Certainly a period of a lot of fluctuation and uncertainty. The Fed, as I think most people know, is trying to get inflation under control. And one of their ways of doing that is to increase short-term interest rates. And they've done that relatively dramatically. And the market is struggling in some ways on the commercial real estate side and multifamily in particular to catch up with the speed and severity of that adjustment. I should point out that when the Fed changes short-term rates, that does not immediately affect long-term rates, but certainly what we've noticed is, parallel movement. So when they started this process several weeks ago, the market really kind of hit a pause. We saw that on the lending side where borrower requests dropped off pretty dramatically when rates fluctuated so quickly. More recently, I'd say within the last 2 to 3 weeks, we've seen activity pick back up. That activity is driven largely by people who have a specific need. In other words, perhaps debt that's coming due, or perhaps a partnership buyout or something that really is, unavoidable where they need to move forward. I have seen, and you and your firm would know better than I do on, the acquisition activity, but certainly from what we've seen, that has slowed. And investors are really trying to figure out how this plays out in terms of valuations. If you see an increase this quickly, a rise this quickly in interest rates, generally that would certainly impact their cash flow returns, and therefore an adjustment usually results in the value.
Yeah. So with the latest report indicating that inflation might be stabilizing a little bit, and it seems like we'll probably need another report at least before we know for sure. Can you make any predictions, or do you have any thoughts on what to expect in the next month or two?
Well, so the indication just as of yesterday was that inflation has dropped from 9.1 to 8.5. So that's moving in the right direction, but that's still certainly not where the Fed wants it. So the near-term projection, and by near-term I would define that as, say, 6 to 9 months, we would anticipate continued increases. If the market continues to respond favorably, and and I think the Fed is targeting an inflation rate certainly below 4, perhaps closer to maybe 3 or 2. At least, I guess I should say, let me characterize that better by saying I think they want to moderate short-term rates to match better inflation rates. So 8.5 is still a very high number. So again, I would say in a 6 to 9 month period, we would anticipate seeing increases in rates to continue to bring that back down.
And as of right now, where are you seeing the interest rates for multifamily?
So the bulk of the loans that we do are 10-year fixed rates, and we have seen that moderate back down from the high 4% range. It's now moderating more into the mid 4% range. It is highly driven by leverage point. So the more equity a borrower contributes, and therefore the lower the loan to value, the better the interest rates. And we are seeing in some cases those numbers dip into the lower 4% range. But if you want full leverage, which in today's market would be somewhere in the range of 65% of value, that interest rate is going to be in the, say, 4.5 to 4.75 range for multifamily.
Well, I think that does it for this update, and we look forward to talking to you again in a few weeks.
Perfect. I appreciate it, and happy to look forward to the next one.
We'll be back in 2 weeks with another edition of Multifamily Market Watch. Don't forget, you can stay up to date on multifamily news throughout the week by visiting or subscribing to the Northwest Department Investor blog on our website.
Our entire office specializes in multifamily real estate, making HFO the largest multifamily brokerage in the Pacific Northwest. Your success is our passion. Build your legacy with HFO. Call 206-705-5115 or visit our website at hfore.com for more information. HFO is an affiliate of the Global Real Estate Advisor Network.